Welcome to today's Axios virtual event on the future of digital funds. I'm Kia Kokolacheva, a senior business and technology reporter, and I'm joining you today from San Francisco. Welcome to our audiences on Facebook, YouTube, X, LinkedIn, and on Axios.com. Join the conversation today on X with @Axios and hashtag Axios Events. During today's event, I'll be joined by my colleague Lucinda Shen, and we'll explore how innovations in financial technology could modernize how governments and citizens distribute and receive public funds. And our first guest is Arkansas Congressman French Hill, joining us today from Washington, D.C. Hi, Congressman. Welcome.
Kia, great to be with you. Thanks for having me.
Thank you for taking the time. So we're going to jump right in. We're here to talk about how fintech can help the government modernize how it's deploying funds to the public and how Americans can receive payments. So why is that such an important conversation for us to be having right now?
Well, we've seen the benefits over the past almost 30 years now of Web 1, the internet. We've seen the benefits in commerce and email in our interpersonal lives. We've seen hundreds and if not thousands of businesses created on Web 1. So it's time for the U.S. government to think through properly and carefully, how do we make sure that that innovation continues as we go to Web 3 and we see more and more innovation take place by writing applications on a blockchain, which allows each of us to own our own data, own our own content, and really create a new set of businesses and have a new set of sources of tokenized activity, and also expand the payment rails out there that you mentioned by including a digital tokenized payment, like a payment stable coin, as a source of payment on that blockchain ecosystem.
I'm going to ask you about blockchain technology in a minute, a little bit deeper. But first, I'd love to hear if you could have a magic wand to wave at the U.S. government, what would be sort of like your top three things you'd want to see? Would it be a type of legislation or something from any of our U.S. agencies on that front?
Well, first, here on the House floor this week, we're going to take, I think, a good first step, which is to recognize that people want to write applications using tokens and using blockchain in all aspects of our daily lives, not just financial services. And for me, the fact that we would use this technology with smart contracts to change how we do business in the country will produce benefits for consumers, innovators, and businesses with one principal way. One, it's obviously an audit trail by virtue of the fact that it's a ledger-based system. So it's going to be more accurate. Consumers would have less fraud. The government, if they were to use blockchain, would have less improper payments, which is approaching, from estimates from the House Budget Committee, of almost $1 trillion across the government in improper payments. So if one were to use blockchain technology in that kind of an application, you can see the real benefits to taxpayers inside the government. So reduced fraud, better compliance, reduced improper payments are all benefits I think the government would realize. And the private sector will save money. You'll see agency costs in many different kinds of applications narrow, so it will become less costly to send a remittance money to a family member in Mexico, or it would reduce the cost of closing a home loan. All of these things, I think, are the future that we have by writing applications on using blockchain technology.
I'm sure you talk to companies and entrepreneurs all the time. Are you hearing from any folks in the fintech world that really are building technology or want to apply their technology to these types of government payments and interactions with Americans?
Well, of course. I mean, I think you see it all over the country, people experimenting and writing applications on blockchains for exactly those kinds of purposes. For example, the state of California has taken their new driver's license, their digital driver's license, and put it out on a blockchain so that if you're using your driver's license in a store to verify your age, for example, you're not showing them your license, you're just scanning your smartphone and it's reading that application and telling you that, sure, you're over 21 years old. It's that kind of privacy protection and yet a digital verification of identity, I think that would be a good use. So there's an example out in California, but there are many others. I hear people experimenting on cutting the costs in various forms of securities trading right now as we speak, including the Franklin Mutual Fund Company has put their new money market fund on a blockchain, and it's offered to more people at much lower cost because they're using blockchain. So you see this kind of experimentation up and down the corporate ladder, from startups all the way up to the biggest companies in our country.
As a resident of California, it's a very good reminder that I should get my digital license. So thank you for that. I really want to ask you about sort of another challenge that comes with that, which is that unfortunately we still have a lot of Americans who are underbanked or unbanked. How do you think about balancing, incorporating all these fintech innovations into the way government operates and interacts with Americans, and also not leaving those folks behind or making sure that they're the ones who can really access a lot of the resources that we get from government?
Well, I think fintech technology, either in serving customers by giving them access to a deposit product or loan product, an investment brokerage product, have been able to lower the cost in delivering that service. And they've made it more convenient. In other words, it's in an encrypted form on someone's smartphone, an Android or an Apple device, where you've got the encryption in the device. That is making financial services, to use your example, much more available to people at a lower price in a more convenient manner. You don't have that intimidating process of trying to figure out what bank you're supposed to go to, or how to make an appointment, or how to go through the laborious process of opening an account, or having embarrassment because your credit score is too low, or whatever. So even with this layer of fintech, I think you're seeing those advantages. When you add the idea of a smart contract using a blockchain technology also to deliver those services, in my judgment, you'll even lower the cost further, and you'll have this identity and fraud protection and compliance certainty that benefits both the financial services enterprise as well as those consumers.
Obviously, blockchain tech and cryptocurrencies have been around for over a decade now. We have, major publicly traded companies that are entirely built on the fact that we have access to this tech. But at the same time, it feels like there's so many less advanced technologies that our governments and our agencies should be getting up to speed on. So in terms of timeline, how do you think about getting even just more advanced direct payments on mobile from government agencies before we're even talking about blockchain tech in that context?
Well, it's a real good question. For really about, I'd say, 5 to 8 years, somewhere in that time frame, the Federal Reserve and the private sector have been working to, in a competitive way, to bring faster payments to the American consumer. And what I mean by that is people use the term real-time payment, meaning that if you send Zelle or Venmo payment to your friend, that it literally is deducted out of your checking account at that moment, for example. So it debits your account and credits their account in real time. That technology is now available, and it's rolling out to banks all over the country. There's both a private sector alternative and a Fed product called FedNow, and all banks are eligible to sign up for those products. So that's real-time payment. So that's a faster payment, whether you're using it electronically, peer-to-peer, like Zelle or Venmo, or in a debit transaction. And then secondly, here at the end of May, we're going to T+1 in our brokerage companies. So we're going to settle stock trades in one day. This has gotten very little publicity, but it's another sign of how fast that we're moving towards a real-time financial economy. And then I'll say finally, on people who pay their checks online or schedule payments, the Federal Reserve has announced that their Fed wire system, essentially the clearinghouse system for clearing checks across the country, that system, the ACH system or the Fed wire type system, are going to be open 7 days a week. And so that will make payments faster as well. So I think our infrastructure in our very rich, affluent country, the United States, you're seeing that payment technology speed up with or without fintech or blockchain, but those things will enable fintech and blockchain to be more successful.
Do you think there's a future in which maybe we're getting our social security payments through some kind of blockchain technology?
I do, and I think that's why I think the government should look at blockchain, particularly for scheduled payments, because of this huge improper payment amount that we've seen across all the federal agencies. And so I think if you think about blockchain as an operating system to deliver a service to a consumer, it's got a real future.
Last question. Let's make it a fun one. What is your favorite fintech app that you use right now?
Well, it's absolutely peer-to-peer payments, and I'll say that I've got both Venmo and Zelle, and both are a great way to conveniently pay somebody back instead of any other more complicated way.
I love it. I love those apps as well myself. Congressman, thank you so much for being here today and chatting with us.
You bet. Thanks, Kia.
And next, we have a View from the Top segment with Chris Freitz.
Hey, thank you, Kia. Good afternoon, everyone. I'm Chris Freitz. Thank you for joining us, and a big thank you to our sponsor, ClassWallet, for making this conversation possible. And joining me now is the CEO of ClassWallet, Jamie Rosenberg. Jamie, welcome to Axios.
How you doing, Chris? Nice to meet you.
Thanks for coming. I'm really interested in talking with you because I think a lot of us know that government agencies have long struggled to distribute public funding. We're talking things like grants, subsidies, social benefits in ways that satisfy everybody. And I wonder, why is that?
It's been our experience that the agencies that have been delegated responsibility are actually doing the best they can. They're in an unenviable position where they have to please three different stakeholders whose interests may not be aligned. You have policymakers who develop the program who may not give clear guidance to these agencies and may not be sensitive to the complexities of implementing that program. You've got the beneficiaries of the program who want immediate access to the funds or the benefits of it. And you have generally the public that demands transparency and needs to know how every single penny is spent. And in the middle of those three parties is this agency with the responsibility to distribute those funds. And they're trying to make everyone happy, and it's impossible. It's impossible to make everyone happy. And unfortunately, many times, nobody is happy. That's what's happening.
And it sounds like a recipe for inefficiency, for red tape. I mean, what has been your experience? What kind of red tape have you seen in these programs over the years?
Really, where bureaucracy and red tape come from is the agency's priority, which is valid, to ensure the funds are spent as intended, to manage the spend compliance of those public funds. And what's happening is those agencies don't have adequate financial technology to do that. So they're relying on processes like reimbursement or modules in their accounting software that might not be designed for this complex problem. And that inefficiency of ensuring the compliance that the money is spent as intended, that's what's driving the inefficiencies. That's what's happening.
So how do those inefficiencies and those challenges impact the program outcomes? Because that's what everybody is worried about, right? And is how is a program performing?
The best way to answer that is maybe by illustration. So let's take early child care subsidies, right? These subsidies are designed for families to bring their children to early child care providers. The agency has to make sure that that child, in fact, was in attendance or received a service from that provider. So what happens is the family takes the child, the provider then has to submit paperwork fill out forms, and may have to wait 7 weeks, 10 weeks, or 12 weeks to get reimbursed. The fallout of that is only a handful, certain number of providers can actually afford to go out of pocket 7, 10, 12 weeks before getting paid for the service they're providing. And so that reimbursement process, that process of ensuring the funds get spent as intended, actually disenfranchises a lot of other providers who can provide the service to that family, but cannot afford to go out of pocket for that long. So families are left with less choice. There's less options. There's less providers participating in the program because only those that can afford this process in which the agency is using to manage compliance ultimately participate. And the result is just an inverse, is really undermining the outcome of the program. That's what's happening.
So less choice, fewer options, certainly not ideal to getting good outcomes. And I wonder, how does digital wallet technology help solve for these problems, Jamie?
Digital wallet technology has already made a profound impact for dozens and dozens of public funding programs, improving efficiencies and improving outcomes and reducing costs. What a digital wallet is an account for the beneficiary. Then the agency sets up the account so that only approved providers can be connected to that digital wallet, ensuring that the beneficiary can only pay providers for services already authorized by the agency. The digital wallet then automates all the payment, reconciliation, and compliance processes, dramatically reducing the amount of time it takes to ensure the funds get spent as intended and to issue payment to that provider. And as a result, many more providers can participate in the program. The agency can manage compliance in a much more efficient way, can reduce the costs of administration, and ultimately improve the outcomes of that program. And as a result, the beneficiaries are happy, more providers can participate, they get paid more quickly, they're happy. The policymakers are happy that the program is going as well as they had hoped. And ultimately, that agency that's been delegated responsibility can be satisfied that they've managed the compliance, that the funds are spent as intended in a highly efficient, cost-effective way that ultimately helps as many people as possible.
A real game changer for funding public programs, the digital wallet. We have to leave it there. Jamie Rosenberg, the CEO of ClassWallet, thank you so much for joining us. Appreciate you coming on Axios.
Thanks, Chris. Thanks for having me. I appreciate it.
And now, over to Lucinda Shin.
Thanks, Chris. Our final guest today is North Carolina Congressman Wiley Nickel, joining us from Washington, D.C. Congressman, thank you so much for being here with us today.
It's great to be with you. Thanks for having me.
Of course. So I want to start off with the fact that payments, government payments in general, are famously challenging and difficult, as every taxpayer who's gone through that filing process knows. And you've obviously worked a lot on varying crypto bills, modernization bills. Can you tell me what you see potentially changing technologically going forward in services like food stamps or in tax payments, anything that deals with government disbursements?
Yeah, no, we got to get up to speed with the 21st century, on the federal government level. And the blockchain provides the opportunity for us to do that by allowing us to send money to grant recipients and others more efficiently, more transparently, in a more secure way, and saving the taxpayers money. Just as an example, I worked hard. I got an earmark in the federal budget for Wake County for my sheriff's office. Got him $1 million for body cams and technology. If we were able to get them those funds through the blockchain, we'd do it a lot faster. We'd be able to track the money a lot better, and we'd save the taxpayers money.
That's interesting. I mean, how long did it take for that money to hit their bank accounts? Has
You
it
know,
hit?
I presented them with a giant fake check, which they couldn't cash. But I know it takes a lot longer than if we could use the blockchain to do it. And some agencies in the federal government do, are using this technology, but we got to get many more, up to speed.
For sure. I mean, why does it take so long? Why is it taking so long? Right? Is there fundamentally something flawed with each of these departments that it takes more than a few days when, in theory, you can get something in a matter of hours or even days in some modern fintech platforms?
There's so much, there's so many layers of government, so much red tape. It should be a lot faster. But that's what this technology allows us to do, to improve the speed, the efficiency, the transparency. So, all in on modernizing, the way we send money for the federal government.
Yeah, I think one of the challenges, one of the kind of trade-offs that we've seen with speed as well as with security is really the challenge of whether or not we're being careful enough in catching all the fraud that comes through. So famously, one of the models when we're seeing kind of fintechs and governments partner up the PPP loan disbursements, there was quite a bit of fraud that was found later on that was not caught by some of the fintech companies. How do you think about balancing those two issues?
As we've been dealing with this issue in the House Financial Services Committee, in a number of different ways, you talk to the Secret Service, you talk to law enforcement, and they tell you that, when you move money on the blockchain, it's much easier to track and trace, and it's going to make those transactions more secure, and easier to avoid fraud. So that's what this technology, allows us to do, and it's a reason why I'm so bullish on making sure Congress acts as much as we can here.
Tell me more. So one thing you've been very active on is the Fit for the 21st Century Act. A lot of it has focused on cryptocurrencies and who actually within the government has the authority to regulate and govern over that sector. One thing you've talked about before is you are concerned with the SEC's decision to enforce via regulation. Can you tell us a little bit more? I'm sorry, regulate via enforcement. Can you tell us a little bit more about how FIT would create more clear lines around the entire industry and who regulates what?
Yeah, this is a big deal. Today, we're voting on landmark legislation, the first time Congress has ever voted on, crypto legislation. We're operating on a 100-year-old securities law, so we need to get with the 21st century. And the SEC's regulation by enforcement is creating tons of uncertainty in the industry, and it's just out of step with the rest of the Biden administration. So this bill allows us to establish clear rules of the road, and whether you love crypto or you hate it, you should support regulation. That's what this bill does. Fit 21 will, for the first time, provide regulatory clarity. It'll provide clear rules of the road. It'll protect consumers, and frankly, it'll make sure that we cement our place as the global leader for financial services around the globe. We do so well because we're the global reserve currency. Our financial markets are the best in the world. And if we want to be able to say that in 50 years, we got to catch up with the rest of the world when we're talking about the strength of the digital dollar. And that means the regulation the approach we use to digital assets. So huge vote, really excited to be pushing hard for innovation in this space. And I think you're going to see a good bipartisan result today. In the House Financial Services Committee, I was one of 6 Democrats who joined with my Republican colleagues. It's been a bipartisan effort, and in those efforts, not everybody gets everything they want. That's the sign of a good product when not everybody is super happy with everything.
Yeah. It's interesting. I want to take a step back and talk about FTX, which was super active, right, in the past couple of years before their downfall in 2022, at least. In Washington, D.C., you've been working on this bill or something around this arena for a while now. To what extent do you think what happened at FTX created basically led to a step back for the crypto industry in DC? And has the sentencing of Sam Bankman-Fried changed any of the tenor in DC?
Yeah, no, FTX colors all of this this whole issue in a very significant way. But the fact is, if we pass this bill, it's going to protect consumers and make them more safe than if we do nothing. Requiring firms not to commingle funds. FTX was based in the Bahamas, and they were an offshore company. And we want to prevent the next one from happening. And unless we have clear rules of the road and regulatory certainty, and preventing the companies from commingling funds the way that FTX did, we put our my constituents, the American public, at risk. So that's the main point that we're trying to drive home about this bill, is that if you want to protect consumers, you need to regulate the industry. That's what the bill does.
Have you gotten any feedback from the SEC on how they feel about this proposal?
I've gotten great feedback from the CFTC, who is a big part of this. The SEC has been a real challenge, and frankly, I hope folks who are watching, the political football that the SEC is making this issue. It really should not be a partisan issue at all. But I think the SEC is far out of step with the rest of the Biden administration. Gary Gensler's regulation by enforcement is absolutely the wrong approach here. He's openly hostile to crypto, and that doesn't serve President Biden's interests. And frankly, it's at odds with other other agencies in the administration.
I would be remiss not to mention it is an election year this year. To what extent do you think, for at least your constituents, and I should mention in some polls that North Carolina is actually a state that the two candidates may be fighting for, depending on which poll that you're looking at. To what extent do you think crypto is a make it or break it issue for what percent of constituents in that state?
It's a big deal nationally. If we step back, 20% of registered voters, own, use, trade in crypto. So it's not going anywhere. And a lot of them are single issue voters. They're looking at what's happening in Congress. I don't want this to be a partisan issue. I don't want to give this issue to Republicans. So it's one that I think really matters. And what we're going to see, I think today, is a good bipartisan group of support for this bill. But North Carolina is the state that Donald Trump has to win if he wants to be president. If Trump doesn't win North Carolina, he will not be the next president of the United States. So we were always really close. 8 years ago, Hillary lost by 3 points. 4 years ago, Joe Biden lost by 1.5 points. I think we are 1.5 points more in the center. So it's going to come down to who gets out to vote. It's going to be really close in North Carolina, and we're going to get a ton of attention in this next election.
Effectively, there's kind of no issue too small.
No, in a race that's going to come down to maybe 10,000 votes in our state, you need to make sure you're reaching out to everybody and pushing on these issues. And digital assets is an issue that is very important to a lot of people. It's important to me, and I don't want to see the Democrats become a party that's hostile to this industry. You have Gary Gensler, you have the Elizabeth Warren camp, but that doesn't represent mainstream Democrats.
Yeah, well, I am curious how you think, because there has been regulation by enforcement for sure. There's kind of also been some legitimacy in the way that the SEC has gone after some companies. And so I'm curious, what's your view on how they've gone after Coinbase and Binance? Does that fall more?
You have, with Coinbase, you have a good actor. Binance obviously is not, but the advice I've given to the SEC is more carrot, less stick, and nobody understands what their end game is. The bottom line, though, is Congress should act, and we have the chance to do that today. And just going back to last week, we passed through the House a CRA on SAB 121, the Staff Accounting Bulletin 121, a very hostile to crypto guidance by the SEC. It got 21 Democrats in the House, then 12 Democrats in the Senate, including Chuck Schumer, Cory Booker, and others, pushing back on what Gary Gensler is doing here. So you're seeing a bipartisan pushback. And I think for folks watching, they should understand that this is a bipartisan issue where not everybody is especially happy with what's going on with the SEC.
Great. Well, thank you. We're unfortunately out of time, but thank you so much to Representative Nickel for joining with us today.
Hey, it was great to see you.
Thank you all for joining us this afternoon for another Axios event that has made everyone smarter, faster. For more coverage on innovations in fintech or to subscribe to any of our Axios newsletters, please visit axios.com/newsletters. Thank you all for joining, and we'll see you on axios.com.